Hello, how good is your financial planner in this day and age after the financial crisis, where there's been a lot of publicity surrounding the selling of products? It's one of the questions that Singaporeans are bound to ask themselves. We're joined by Bernard Lim, who's from the Insurance and Financial Practitioners Association of Singapore, IFPAS for short. Bernard, thanks so much for coming in.
Thank you very much, Mark.
Now, you've been in the business for a number of years.
Yes.
You can disclose to us how many. How has the industry changed, and how would you characterize financial planners in this day and age?
Well, Mark, financial planning has really changed a lot actually since the time that I joined, which is about maybe more than 20 years already. And when we started off in the industry, it was very, very much a product-based situation where financial planners, or in those days you call them insurance agents, they'll go out there and they'll sell a product. But over the last 20 years, what we have seen is the same financial planners, or those who have joined the industry, they have actually changed the types of products and services that they provide. So it is really a lot more comprehensive nowadays. There's a lot more planning involved, a lot more understanding of the client's needs. And fundamentally, that is also because the consumers have already changed, in the way they look at financial planning. And so there is a demand for more products, more demand for services, more demand for information. And so now we have gone into things like not just risk management and insurance planning, but we have also gone into things like investment and retirement planning, and also gift and estate planning, understanding also the legal and tax part of the whole planning process. So it's really, really changed.
That's quite comprehensive. So what are the sort of questions that your customers or any of your 6,000 members could be approached with? What sort of questions could their customers be asking them?
Well, I think that the customers today can really expect the financial planners to be understanding their needs, first from the standpoint of things like their risk profile. Which is not just about understanding their propensity to take risk. So
that is their willingness to take risk.
Yeah, the willingness to take risk. They are also looking at the ability to take risk.
That might be different.
Yeah, they are different. And the consumers can expect financial planners nowadays to be asking those kind of questions because, with the investment environment being what it is today, being very volatile, the consumers need to understand that it's not just their willingness to take risk, but whether they have the ability to take it vis-a-vis the other financial decisions that you have to make. So consumers can expect that from the financial planners today. They can also expect the financial planners to be asking them questions like, not just what are their needs, but when they need money at various points in their life, different life stages, and so on and so forth. Expect them to be sharing more about products, the different products that are available to meet their needs. Expect them to understand a little bit of legalities of the decisions that they are making, and maybe even some possible tax implications.
I was going to ask you, are they now turning half into lawyers and tax consultants as well?
Well, not really. I would say that the financial planners have also learned to become aggregator of services. And when I say aggregator of services, I say that the financial planners may not be the ones to actually deliver those kinds of very intricate planning services like, if you're talking about trust. Trust can be quite a complex legal product, if you like.
Like a family trust.
Yeah. I mean, that's really a lot more complex. Or, very intricate cross-border tax planning. Those really are not in the domain of the financial planners. But what the financial planners can do, and they are doing today, is to aggregate those services so that the consumers actually end up looking at the one person, the financial planner, in order to find himself available to those services, so that he will become the point man, if you like. Right. He will become the source of planning so that the intricate work actually be passed on to other people. And so this kind of is very much the same as most other professions that you come across, whether it's legal or medical profession, where, some of the people that you see, if you see a doctor or a general practitioner and you have a problem, let's say supposing with your breathing, and so he might refer you to an ENT specialist. Right. He's not an ENT specialist, but he's the point person. He's the person you go to and you seek at least the main advice from. And so if there's anything more complicated than that, he'll be able to point you to somebody, and so that somebody is somebody he works with. And so we can see that the profession is really moving in that kind of a direction.
Right. So it's almost like having a private banker for those people who are not in those upper echelons who can afford a
absolutely, banker. Absolutely. Because, the private banks and what we're doing are a little bit different because the private banks have the infrastructure to do it. But that does not mean that the financial planner cannot do it, because he can actually start to network and work with other forms of services or maybe service providers or product providers to be able to make that available to his customers.
Now, your association in its current form has been around since 2003.
Yes.
And again, there's been quite a transition over time. What sort of, I guess, levels of sophistication have you seen in the clients? To what extent have the clients actually become more sophisticated as well with the questions that they're asking?
They have definitely become a lot more sophisticated. Very simply because information is so readily available today. I mean, today at a click of a button, you Google and you can find a lot of information out there. Although having said that, not all the information out there is necessarily accurate. So clients are a lot more self-directed, if I can use a word. They would go to investment fairs. They would go to the internet. They will buy journals. They will
go to Singapore Investment Week.
Absolutely, absolutely. I mean, we're not short on information. But that can also make it quite confusing for the consumers, especially when they see so many pieces of the jigsaw. But the question is, how do you put all these things together? So that remains the challenge for the consumer out there, and it's sometimes a little bit difficult to tell the real ones from the quacks. You don't know what is a scam, what is not. Is there a way to check all these?
Well, let me
things
ask you
out?
that. How can you tell the difference?
Well, you can do a little bit of due diligence. I mean, I would typically recommend for consumers, number one, to do their own due diligence. They can find things like in the MES website. There's pieces of information about who to avoid. They have a blacklist there. They also have got, like, let's say, supposing you go to the investment week, talk to the people who are actually providing those products and services, and just check them out and have a bit of a feel. But also there are certain things that can be done. Let's say, supposing a company is representing a kind of product or services that are located overseas. Then there's a counterparty risk, right? The company that's here that's representing them, you can do a bit of a background check about these companies, whether they are paid up as $2 or they are paid up as $1 million. I mean, there's a huge difference. There's a counterparty risk. So these are things that consumers can do in order to avoid making bad investments and therefore possibly losing their whole life savings.
What about your 6,000 or so members?
Yes.
Do they have IFPAS printed on their name cards? And if they do, actually, what additional benefit or credibility does that actually give them?
Sure. At the present moment, we don't have a practice of putting IFPAS, on the name card, because different companies have different views about whether that should be represented on their company card. So we are working towards all of those things that one fine day the IFPAS participation or the membership will really be of something of great value, and it is of increasing value now. Why? Because number one, we are working towards some form of self-regulation ourselves, where the members themselves actually start looking at how important it is to regulate themselves amongst themselves, where the industry actually look at errant practices and how to correct all those things. Number two, they are given education that sometimes companies don't provide. And these education could range from something that is broad-based to something that's very, very specialized, like estate planning, business protection planning, and so on and so forth. So that's pretty specific, that maybe only on an industry level through the association is being provided. And then, of course, the next thing is that the IFPAS mark, if you like, will in the future represent the involvement of the financial planners in the wider community by providing social services like financial counseling and so on and so forth. So there will come a day, and we are working towards that feverishly, that the public will take a look at a financial planner and ask, at least, are you a member of IFPAS? And by saying that they are, then at least there's some kind of a check and balance. That being a member of the association is really of great benefit because it protects the public as well. So I think that's something that the public can look forward to.
So at least ask that question. And it's a question that CIAS has in fact asked too, right?
Oh, okay.
They've just formed a memorandum, or signed a memorandum of understanding with you. What benefits do CIAS members in particular expect to get from that?
Well, the thing is that we can bring to the table, if you like, the planning aspect of the whole wealth planning model. Because right now, investment is but one part of the whole entire wealth planning or financial planning model. And so what IFPAS can bring to the table is that we can actually assist, if you like, SIAs to educate the members on other areas of wealth planning or financial planning. For instance, as I mentioned early on before, risk management and insurance planning. They are already doing investment and retirement planning, but we can come in and also talk about gift and estate planning and provide some legal and possibly, like I said, tax implications of the financial decisions that they're making. So it makes the picture a little bit more holistic, more comprehensive.
More strategic rather than just the tactics of buying stocks.
Right. So there are many angles. One big issue today, because of the volatility of the financial markets, is this whole issue of risk. And so we are talking about risk management. So risk in itself has several aspects to it. And I mentioned early on before that one of it is about not just risk propensity, but risk ability. So financial planners can come in and add value there. Then the other part about risk is really, are financial planners able also to help consumers, quote unquote, monitor the markets? Not so much give advice, but let them know where the markets are going. And then finally, risk management from the standpoint of, like, let's say, supposing something does happen to the investor by way of, let's say, supposing an accident, hospitalization, or even death, then the investment decisions that they have made have to be backed up by maybe even the right insurance products or even the right estate planning process to make sure that all the investments that they have made, actually, they don't lose, because ultimately it's going to be passed on to somebody else.
So there's an asset allocation element to that as well.
Absolutely. So we really feel that we can contribute there because we've been in this part of the industry for a long, long time, and so we can add value to the the people who are with SIAS.
To conclude then, there's been a lot of focus obviously on the selling of products in the wake of those highly publicized issues, Lehman Brothers mini bonds and so on. To what extent do you think that such a situation could be repeated now after the MAS has obviously instituted new rules, the new compliance regulations, the alliance that IFPAS has formed and so on? What safeguards these days are there to just product pushing for the sake of it rather than actually genuinely advising the clients?
Okay, I think there are two angles to this. Number one, exactly what you mentioned, the regulation by the regulators, which makes licensing of financial planners a lot more onerous. Number two, people who are staying in the industry have to continue to get new licensing processes going. So that would kind of like keep out the quacks or eliminate those people who are not serious about the business. Then the second thing is where IFPAS comes into play, and we talk about self-regulation, which is something that I mentioned early on before. And we want to look at the ethical issues, which is something that not necessarily compliance can do. Because now we are talking about ethics. It's about the way you do business.
Compliance is box checking.
Yeah, it's gone beyond that. So that's the self-regulation part. So you have got the official regulatory checks and balances. But then within the industry, through IFPAS, we also want to have self-regulation. And then the third part is also, financial planners nowadays also know that consumers cannot be duped, in the past as they have been. Because of the Lehman Brothers issues and all that kind of stuff, but they're also becoming a lot more aware, and so the financial planners themselves are also finding ways to upgrade and to get new information. And so I think that moving forward, and plus a final point, that there is now a wider range of services available to to the consumers. That is from products, which is from tied agents, all the way to full financial planning, which is entirely fee-based. So today you actually have a range, and so consumers actually have a choice. And I dare say that there is a big difference between being independent and being objective. So it doesn't mean that just because a person is a tied advisor with
that is tied to a particular product,
correct, or even a financial institution like an insurance company, it doesn't mean that just because they are tied makes them subjective. They can actually be very objective. Although they are not independent of products, and yet they can be very objective because it's a function of ethics.
It depends on the individual.
Correct. It's a function of ethics, which is what we are trying to promote through self-regulation in IFPAS and all that. On the other hand, you can have a person who's doing full fee base, and he is not exactly very objective because he may have certain skills, because he could be actually getting, commissions of certain products that he recommends.
Or he has some pets.
Yes, certain pets. So objectivity and client interest is really a function of the planner himself, which if he he understands the business and understands and really going out there to serve a consumer need, he can be very, very objective without being independent.
So it's almost like you have to interview the financial planner beforehand. Get to know them and find out what they're...
Well, absolutely. But like the same that I mentioned about, different product types and, especially products are in a foreign land and, you're investing in all those things, you got to do your due diligence.
Yes.
So I think it's fair to expect that nowadays consumers would want to do their due diligence by saying, it's not just because this person is a friend or is a family member and therefore I do business with this person because of a relationship. But that they take a very objective view about who this financial planner is. And so it will come a point in time where consumers really have got a choice, not just by way of products and services, but the financial planner himself or herself. And I think that's great. And those things actually will move towards a model where you will see a whole lot less of this abuse,
yes,
where products and services are actually not transparent and all that kind of thing, and people lose their retirement, pot.
Right.
You'll see a lot less of that, and I think it's really a great thing that's happening right now.
So, what will you be talking about?
I'll be talking about creating and preserving your legacy, and I feel that this is a very important topic in the midst of all the investments that people are making. They need to, and they ultimately are creating their legacy.
Legacy is a strong word.
Oh, it's a very strong word because it's about passing it on to the next generation. It's not just about passing your valuables, but it's also about passing your values.
Right.
So that should be a pretty interesting topic.
It should be. Sounds very interesting already. Thank you very much, Bernard. We'll talk to you about that as well, except we're out of time.
Okay.
Bernard Lim from IFPAS.